Hello everyone. In this video I will talk about the internal control, or the chapter of internal control is the sixth chapter in our course. Internal control is one of the most important aspects organization must consider. Without an adequate internal control system, organization might fail to survive. In this chapter, first we will introduce some frameworks, and then we will talk about the definition of internal control, the objectives, component, and principles of internal control frameworks. Then we will move to roles and responsibility into the system, and we will end the chapter with the limitation of internal control and the different classification and types of control. So let's get started. Frameworks in general give us guidance to specific subject matter. These four frameworks, the ISO, the COSO, ERM, the COBIT 5, are you already know. These two we covered in chapter 4, and COBIT 5 most of you covered in the Accounting Information System course. In this chapter we will introduce this framework, which is the Internal Control Integrated Framework that is issued by COSO. What are these frameworks? These frameworks are related somehow to internal control. This one is an internal control framework. However, this COBIT 5 is about the internal control over the IT system, and also a framework for IT governance. These two frameworks, which we have covered in chapter 4, are the ERM framework. It's a risk management framework. What is the difference between the risk management framework and the internal control frameworks? They both, there is no big difference. However, they both deal with risk mitigations and aspects of internal control. However, the focus of the internal control frameworks is on more narrowly defined and tend to be less strategic in nature. That's because it's focused on internal control. However, these two are more broad and also cover the strategic risk management. These are the most known, or these are like some frameworks that you have covered before. Now we will move to the most internal control recognized frameworks. There are three globally recognized internal control frameworks. These are the COSO and the COCO framework, which is issued by the ICA, and Trumbull report, which is issued by the Financial Reporting Council. Both the COSO and the COCO share or have the similar definition of internal control that describe the internal control as a process that provide reasonable assurance for achieving the objective of an organization in three specific categories: either effectiveness and efficiency of operation, or reliability of reporting, and compliance. These three globally recognized also share or have similar component, and their component basically the same. For example, COSO have 5 components. These are the risk assessment, control environment, control activity, information communication, and mentoring, which we'll talk about it later in depth. COCO and the Trumbull framework share similar components. All the three frameworks also agrees regarding responsibility for internal control. They put the responsibility of internal control not only on the senior management and board of director, but also to every individual in the organization. The internal control over financial reporting. The internal control, or to have an adequate internal control system, is important. However, there is no law or regulation that impose or force uh, implementation of an internal control frameworks. However, the only law regarding internal control framework is that the US SEC requires the CEO and the CFO of publicly traded companies to give their opinion on the design adequacy and operating effectiveness of the internal control over financial reporting. Why that happened? Because the US Sarbanes-Oxley Act in 2002 put responsibility for the design, maintenance, and effectiveness operation of internal control on the shoulder of the senior management, especially the CEO and the CFO. So the USC SEC requires the CEO and CFO to provide opinion on a quarterly basis about the effectiveness and efficiency of the internal control over financial reporting. So not internal control in general, only internal control over financial reporting. That is what required by law. The SEC requires evidence of compliance. So when the CEO and the CFO of publicly traded company provide their opinion, they must support their evaluation, or they must support their opinion. How can they support it? By using a suitable recognized control framework. And this could be COSO framework or the COCO framework or the Trumbull report. However, the SEC ruled that COSO framework satisfy our criteria and may be used as an evaluation framework for purpose of management annual internal control evaluation and disclosure requirement. Applying the COSO framework. In the US, many organizations successfully apply the COSO framework despite its significant cost. However, not all organizations. A smaller publicly traded company struggle to comply because of the cost and also because other challenges. For example, obtaining sufficient resource to achieve adequate segregation of duties is a big challenge that faces smaller organizations because they don't have enough employees to apply control this control effectively. Other challenges a smaller organization face is the ability to recruit and retain personnel with the sufficient experience and skills on operation, reporting, compliance, or other disciplines. This is due to the less resources because smaller organization has less resources that can provide it to has less resources that can provided to personnel who have the sufficient expert. Also, one of the challenge is that applying a COSO or such a framework, applying an internal control frameworks need attention of management. However, in management in a smaller organization are busy running the business. When we say smaller organization, what do we mean by smaller organization? This exhibit shows the characters of a smaller organization. For example, fewer lines of business and fewer products within lines. So they have fewer lines of businesses, and also in their lines they have a fewer products comparing to large organization. Here, for example, fewer personnel, and this personnel having wider range of duties, and that's why they face or they struggle with applying segregations of duties. So they do not have enough employee to segregate the responsibility enough. Now we will move to define the COSO, or to introduce the definition COSO provide for internal control. COSO define internal control as a process affected by entity, board of directors, and management, other personnel, designed to provide reasonable assurance regarding the achievement of objective relating to operating, reporting, and compliance. This definition emphasizes that internal control is adjusted to the achievement of objective, whether it's operation, reporting, or compliance. This definition also emphasizes a process consisted of ongoing task and activity. The definition emphasizes that is affected by people. So people will affect the internal control. And also this definitions emphasize that the internal control provide only reasonable assurance, not an absolute assurance. Also, this definition emphasizes that it's adaptable to the entity structure. So to the entire internal control could be applied to the entire entity or a particular division or operation unit. Here in this cube, COSO shows the relationship among objective, component, and a principle of internal control. One side shows the 5 components of the COSO internal control frameworks. The upper side shows the objectives or the classifications, the 3 classification of objectives, and here on the right side the different level that framework could be applied on. For example, the internal control over financial reporting could be one of the reporting objectives, and this can be affected by the 5 components. So we need to apply all the principles in the 5 components, and also we must be applied on the entity level and the divisional level, also at the function level. COSO also provide this pyramid to shows the relationship between the components, the 5 components. For example, here it shows the control environment in the base of this pyramid. Why? Because it's the foundation of the other components. So without control environment, whatever risk assessment we have and whatever controls we implement, a weak control environment will implement a weak internal control system. Also here, the mentoring is on the top. That shows that the mentoring must be applied on all the 5 components. So we must mentor our control activity over the environment. Also, we must mentor our activity over risk assessment, as well as our activity over communication, over controlling activity. Also, we must mentor and supervise how we communicate the information. Here, now we will start discussing the 5 components in depth. The first component is the control activity, which says that the control activity provides the basis for carrying out the internal control. The organization objectives are achieved through the control environment, because if it's effectively implemented, will encourage the integrity and will prioritize the consciousness. COSO indicate that the control environment is the set of standard processes and structure that provide the basis for carrying out internal control across the organization. The history of the organization and the culture of the organization will directly influence its control environment. What does that mean? That means, for example, an organization in the United States will have different culture than an organization in Saudi Arabia. And this different culture will affect the control environment differently. So when we design a control system in the Saudi Arabia, it will not be the same as if we design it in the US, because they share different culture. Also, the history. If they, for example, if there is 2 organizations both in Saudi Arabia, but one of them has a fraud or history of a fraud and history of collusion, the control environment will be different than the other organization who have a history of integrity and transparency. The control environments typically includes activity that strengthen or giving a positive tone at the top, also include appropriate policies and procedures, and often a written code of conduct. So if we want to build a strong control environment, we have to set a very strong tone at the top and have a code of conduct, and also have sufficient policies and procedure. The second component is risk assessment. Risk assessment involves a dynamic and iterative process for identifying and assessing risk to the achievement of objective. Risk to the achievement of these objectives from across the entity are considered relative to their establishing risk tolerance. This risk assessment forms the basis for determining how risk will be managed. So, the risk assessment define how we will select our risk response, how we will build our controls activity. As we discuss it in chapter 4, objective setting, event identification, risk assessment, and risk response are key elements of risk management process, and setting clear objectives linked to different level is a precondition to effective risk assessment. So we need to set our objectives before we start the risk assessment. Setting objective at both entity and processes level is important for organization to be able to identify critical success factor. Critical success factors are represented at all levels and facilitate the creation of measurable criteria against which performance could be assessed. Risk assessment requires management to consider the impact of possible changes in the external environment within the on business module. Now we will move to the third component. The third component is about control activities. There is no 2 organizations have the same set of control activities. Why? Because people are different and individual judgment is unique and different. That's why even if we have 2 organizations that share the same strategies, we will not have them have the same set of controlling activity. The controlling activity could be either preventing or deductive, manual or automated. However, we will cover control activities later in this chapter. Also, control activity could be supervisory control that assess whether a transaction control activities are being performed completely accurately according to policies and procedure or not. Management uses judgment to select and develop these supervisory control, especially over high risk transactions. This could be a high level review or a more detailed review. Supervisory reviews are not automatically classified as mentoring activities. It could be classified as a control activity. However, it's a matter of judgment. It's the main difference is that the control activity is respond to specific risk, whereas mentoring activity assess that control within each of the 5 components of the internal control are operating as intended. As we introduce segregation of duties, segregation of duties is one critical concept coming to all control activities. Segregation of duties means dividing the segregation, dividing or segregation the authorization of a transaction, the processing of a transaction, and the physical access to assess related to those underlying transactions. For example, a sales transaction, we must segregate the duties for the one who authorized the sales and for the one who has the physical access to the inventory, and for the one who process or make the sale. The primary purpose of segregation of duties is to reduce the risk of error. So if one person make a mistake or have an error, the other person will correct it, or the 2 other person will have different figure and they will find it out and correct it accordingly. Also, the segregation of duties reduce the risk of inappropriate action taken by a single individual. So if one of the employee want, for example, the one who authorized the sales, want to make a fake sale, he can't because he's not authorized to make a sale. He only authorized to authorize it to authorize the sale. Segregation of duties is one example of a control activities in a well-designed system of internal controls. However, there is another or a many commonly recognized control activities that are presented in a well-designed system of internal controls, including performance review, follow-up activity, authorization and approvals, also IT, access control activity, documentation, physical access control activity, IT application, and so on. And now we will stop our discussion about the internal control chapter and complete the rest of the chapter on the next video. Thank you for listening and good luck.